Joining us now is Chicago Fed President Austin Goolsbee with our Steve Leisman here. Steve.
John, thanks very much. Austin, thanks for joining us this afternoon. And it's become a bit of a tradition now. You're joining us on PCE Day, so we get your take on inflation. So let me start there, Austin. You were pretty upbeat on inflation last time, as in it was going to go down, and it looks like you got what you were after here.
Yeah, look, we got a read that was pretty much expected. It's still higher than what we'd like it to be, but it follows a couple of months that were a little under the target. So I'm comfortable still that we are underneath there on path back to 2%. I think if you break out the components, they also look favorable to my eye, which is to say housing continuing to moderate, services continuing to moderate. The place where we had the firmness was on goods. And if you take a step back, there's a long trend of low inflation in goods, even mild deflation in goods that I would expect eventually we'll get back to.
Austin, the other side of the data today, however, when it came to the consumer especially, was a little bit weak. In fact, real spending was down 0.5%. And you had the Atlanta Fed, which admittedly was heavily influenced by the huge import numbers, but they're now printing a minus 1.5% GDP tracking forecast for the first quarter. Other economists are weaker, but at 1.5%. Are you concerned here that you're at a point where you're dealing with lower or weaker growth and potentially still high inflation?
Partly, as I say, nothing bad should happen that we haven't at least thought through the scenario at the Fed. Our job is to stay up at night. Everything keeps us up at night. Coupling this with the 1 month of deterioration of consumer sentiment that we saw coming out of Michigan, I would say it's definitely worth keeping an eye on. But we've had strong growth. We've had a very robust job market, stabilized at what feels like full employment. So unless we get more observations in that style, I'd hesitate to call it a trend.
Austin, I recall a couple months ago, Fed Chair Powell saying that some FOMC members are factoring in potential policy impacts, including tariffs in 2025, some not. Do you think we're at the point where you're able to factor in Department of Government efficiency moves, or maybe even those potential $5,000 checks back to taxpayers as being having an impact on the economy?
I think we're to the point where we should start working through scenarios, but all of these things are question marks, and geopolitics is a question mark. And I'm out here at Stanford. I'm going to give an address about productivity growth rates that have been surprisingly high and what they mean for monetary policy. That's also an uncertainty. So I think we are to the spot where we're not just political punditizing. Where there are actual proposals that we should work through the scenarios, but I don't feel like we have enough clarity to make a forecast of here's how big they're going to be.
Yeah, we did see that pop in jobless claims yesterday. Some folks are pointing to Doge for potentially as an impact. You just mentioned geopolitics, Austin, and I do want to get your thoughts on this because you've got this long-standing international policy, be it trade policy, be it foreign policy, that is basically being torn up and rewritten in a matter of days and a matter of weeks. So I do wonder how you track and analyze that if you're at the Fed from an economy perspective, especially when some of the actions that are being taken, case in point, what we saw play out in the Oval Office today are, according to some experts, unprecedented.
Yeah, all we can do is just analyze as best we can the impacts on prices and employment. The law says to the Fed, those are our two goals, are to stabilize prices and maximize employment. So we just have to try to think through all the possible scenarios and uncertainties. If they're going to drive up prices, then the Fed has to think about them. If they're going to drive down employment, then the Fed has to think about them. Anything else that's in the foreign policy lane of the administration or in the fiscal policy lane of Congress, we don't weigh in other than these are the conditions. You tell me the weather, I'll tell you what jacket we're going to put on.